Okay, coconuts, I interject regular programming today because we have important news. Our great friends of the show, Thomas and Max, have started their own program, Zen Investing. So I got them on the show today to talk a little bit more about what's so zen about investing, especially in today's market that's going wild and crazy. And of course, also talk a little bit about Max's journey to become a millionaire. Like, he's openly talking about it, right? So how is that journey going to look like? What is the cost of getting from, a nobody day to day, you and I people, all the way to become a millionaire? What is the worldview from that perspective? So it was a great discussion, very fun. I enjoyed having them on the show. If you want to hear more from them, check out TFC Stock Geek Up. They've done a lot. But for today, we're going to focus on the investing ideas. What do they want to propagate? What is Zen investing? And all that jazz. So welcome back. Yeah, tell our audience. I mean, you guys are always on the show, right? You've always been sharing with us a lot of good stuff. But for everybody that's first time getting to know you, introduce yourself.
Yeah, Thomas, you can go first.
Yeah, so my name is Thomas. About 2 years ago, that was when I first left my full-time job, right, to go into full-time writing about investment topic. And I think the journey so far has been really quite an amazing one, right? After I started writing, that was how I met Financial Coconut, get to come on the show, and I also meet a lot of other investors, including Max, right? And also Eugene, who is also often on the show. And it really shine a light to the kind of life that I really wanted to imagine for myself. I've always wanted to do investing full time, and finally, 2 years ago, that was the right time. I left, and then till today, doing what I love, trying to discuss with other investors, always trying to become a better investor myself. Yeah. So right now, I'm very happy writing and steady compounding, and now coming up to a new project with Max, right, which is really Zen Investing.
Got it. Thanks for that. Yeah. So yeah, first of all, thanks for having us on, Reggie. So I think
you guys are always on, so yes.
Nice. Yeah. For myself, it's very similar coming from the 9-to-5 background, though I don't come from government, right? So, but I've never been like a investing nerd since I was young. It's more towards I come from the marketing side. So I love things around marketing, public speaking. That's my background. And so I started investing merely as a way because when you put your money in like certain bank accounts and stuff, right, it doesn't exactly pay like the best interest. So I wanted to kind of have that money work harder for me. That's how I started investing. And so funny enough, I think as a 9-to-5 worker, maybe Thomas we can share later, and that is the way you invest versus a full-time investor is going to be quite different because you don't have time to go and do all the scuttlebutt, go and read through annual reports from page 1 to page 500. So I started really learning how to actually find my own mental hacks as to what to zoom into, what to not worry so much about, so that you can within that limited time really make things work and analyze the company real deep. And then I think very fortunately at the age of 29, after a few years of investing, I was able to cross my own version of financial freedom. But I think how I met Thomas, or how we even actually met, was because I was actually really, I think the word is called intellectual loneliness. And I'm not saying this to kind of say I'm super intellectual or whatever, but so
optics.
I was bitten by the investing bug, right? So it was a few years back. So started wanting to learn as much as I can about investing. And everywhere I go, I just wouldn't shut up about investing. But of course, with my normal friends and families, while they can understand the need to create passive income or more money, everyone wants more money, but they couldn't go into that level of nerdiness or that level of depth per se. And so what happens was, I think a friend or mentor of mine asked me, Max, why don't you just go online and just tweet about your ideas, because Twitter is quite big, so you can be like a lighthouse to attract similar like-minded people. And my first reaction was no, that's not me. I'm a typical Asian guy. I don't want to talk too much about myself. I'm quite shy. I don't want all this attention on me. But I think hit the point where I felt really wow, I need someone to talk to about investing. So I started sharing my ideas, and just nice kind of we connected, and I realized, wow, actually there's quite a bunch of Singaporeans indeed on Twitter, and it was quite surprising. Met people like Thomas, Eugene, yourself, right, Reggie, and yep, that's how we connected, and of course that's how the passion project started.
So you're speaking out to the normies today, right?
Yeah, I am. Yeah,
to
the normies,
to the mass, right? Trying to share people's more stuff. But yeah, these guys are very active on Twitter. So if you don't know that they're on Twitter, I don't know what you're doing. Yeah, you should follow them on Twitter. Description in the below. But yes, Thomas, share me a little bit more about the whole right time, right? Because you said 2 years ago was the right time. What do you mean right time?
I think being able to do what you want to do is a privilege, right? And I spent many years trying to build up that privilege. The right time, it comes whereby you're in a situation whereby you feel financially secure enough. You know, your finances, everything, after accounting for all your expenses, even projecting into a few years, you feel that you know, there is a line you draw whereby, hey, it's time for me to start doing what I want to do. And, you know, I invested for about 14 years, started since around 17, 18 years old. So, you know, I always had a vision of what I really wanted to do. So, you know, I spent a lot of time at first building up that skill set to value add myself as an employee, you know, trying to build that skill set, networking all the time. While at the same time, underspending income, investing the rest. Once it built up to a sizable pool, you know, that was when I felt comfortable enough to just leave the workforce and, you know, really start doing the work that is meaningful to me. And it really is a privilege, right? It's not what everybody can do. So, you know, I'm very appreciative and grateful of this opportunity today to be able to do what I want. Part of it comes from...
Very politically correct. Like, oh, I'm very humble, humiliating, this kind of like... Okay. But the thing you were saying is like, you find financial comfort, right? At some point in time, right? So I think what a lot of people out there will be talking about is the magic number, right? There's always this magic number. Everybody asks me what's a magic number, right? So I want to give you that question. Like, how do you find that comfort? Is it a number? Is it a process? Or what tallies for you to feel comfortable enough to take this leap?
I think the common yardstick a lot of people use is that 4% rule, right? 3 to 4%. If you're able to draw your income 3 to 4% every year, then you're able to live. But here's the thing. I don't believe in not working for the rest of your life, because I think a meaningful life is a life whereby you get to choose your own suffering, right? And so it is not like as though after I quit, you know, this is it. I won't have any more income. The truth today is making money is not super difficult if you set your mind to do it. There is the creator economy, there's this, there's that. But more importantly, the amount that is right for me, right, is not going to be the same amount for everybody, right? And it comes a point whereby I need to determine for myself how much is enough.
Yeah. So how do you then determine? Like, what are your parameters?
I think it's at least 2 to 3 years of emergency cash save up. I know a lot of people say like 2 to 3 years is way too much. It's not maximizing how much you can save up, right? So for me, like my burn rate is around $2,000 to $3,000 a month. So I make sure I have that, at least that amount saved up for 2 to 3 years, because I want to be able to weather all kind of financial storm. And then the next amount you want to decide as to your portfolio, right? I don't want to touch that at all, right? It's not going to be touched throughout crises or anything. And if you were to project that, right, maybe I do a very conservative, the stock market, even if you were to just index, right, it's going to give you like 8 to 10%, for example, based on historical basis. Sooner or later, that amount will grow to a very sizable sum, even if I don't go back to work. Then to me, that amount is sufficient for me.
Yeah. And I think Freddie from Stashaway, he also said about the 3 years. You know, he said the longest financial cycle now is a 3 year, like in terms of downturn. So if you have 3 years, right, you're very, very safe through this process. Right. So, you know, but people talk about half a year, 1 year, you know, 18 months. Macam do startup like that, like 18 months. But yeah, so by extension of that question, right, how are your lifestyles like? You know, like how do you live? You know, like I think everybody make it sound like, oh, you just have a lot of money sitting around and you live off your dividend. But what is your quality of life, man? Open to the floor.
Yeah, I think I can share that, right? So I think one reason we connected quite well is because we're both pretty frugal people. So, you know, we eat the typical cai fan at the coffee shop for lunch and what have you. And it's like amazing. I'm a cai fan fanboy. But I think in terms of lifestyle, it's a pretty
Keith
simple
is also
lifestyle.
a cai fan fanboy. You guys know Keith,
No,
right?
I don't know.
Investment
Who's
modes.
Keith? Oh, okay, investment mode.
It's like always cai fan one. Anyway, yes.
Yeah, it's like the best thing you can ever have, right? And I think just a kind of side tangent. I think there was once a friend of mine asked me like, so Max, like you cross your own version of financial freedom, but how do you know that you're really rich? And then I thought it was a very philosophical question, so I just like paused and I really thought for a second. My answer in that moment was, I knew that I was rich when, you know, even though I've achieved financial freedom in my own terms, I still eat cai fan every day. So that was, I think, just a moment of like, yeah, I think when you realize that your expenses, it's not to the point where it's like over balloon or whatever, and you can really get by with, of course, setting aside the emergency funds, and even in the worst case, you still can weather for about 2 or 3 years without like a normal full-time job. I think that's when it's a really very freeing feeling, right? So I think for me, the lifestyle, it's of course, I think it's easier said than done, because for us, we don't have kids, right? Hopefully you don't have any that you don't know about. Yeah, but just kidding. All right, so I think we don't have kids and all that, right? So it makes life a lot easier. But I think it would change, and I think the caveat is because some people will be watching this and at home like, yeah, Max and Thomas, easy for you guys to say you're not married, you don't have
single
three kids
man,
and
right?
everything.
Do what you want to do.
Yeah, exactly. So I would say, yeah, obviously it's a lot easier in our situation. So I do understand if some people with certain commitments, indeed you feel that, wow, it's so tough because you have to think about 10 and 20 other things before you think about your own financial freedom. But to me, living a very simple life helps a lot. And I think it does add a little bit of advantage that I'm a born minimalist by nature. Just to share how extreme it
born
gets,
minimalist.
yeah, really, like I've hated clutter since young, my whole life. I have a desk that's super empty, kind of like a Zen temple. Right,
Leading us into the discussion.
Yep. But anyway, yeah, so I don't like clutter. So I think having these very simplistic mindset helps a lot. So if you ask me, I would say quite a fair bit of frugality, but just nice the personality matches that. So it makes life a lot easier when you have such low commitments. Yeah.
Yeah, it's like Buffett, right? He lives in Nebraska.
In a way,
Right,
yeah.
super small house.
I
Right?
think-
Nobody talks about it. It's like everybody talk about his investments. Like
Yeah.
this guy, right? It's a lot of surplus on a day-to-day basis, right? So just 放胆去做, right? Just do what you need to do and go and invest, right? And yeah, I think it's a good learning point for listeners. A lot of people think like, oh yeah, I'll put the big dreams later. No, but when you have more and more commitments, it's very hard for you to do big things, right? So when you're younger, maybe try to do a little bit crazy stuff. You will look back and I think thank yourself. Like eventually, you can start accumulating in the 30s. It's not too late.
Yeah, and I just want to say something if I could, right? I think a lot of people look at Buffett and then they maybe criticize in a sense, we're like, wow, yeah, but he's so rich, he's so old, all the money in the bank, what's the use? He's not really enjoying life. But I think you're missing the bigger point here where it's like, accumulation to him is not accumulation for accumulation's sake, but to him it's a game, and the accumulation happens as a side process, right? So I think it's very important to understand that if your mindset is accumulation, because most people, I think there's a well-known financial writer known as Morgan Housel who said this, that I thought hit the nail on the spot, and that is most people, the idea of becoming a millionaire means spending $1 million. And that's also why they likely will not get there for most of them unless they run into a lucky streak. Because the idea of being a millionaire means spending $1 million. So then you will wealth will always evade you because the market will just keep moving further and further. But if to you wealth creation is just a means to an end, and the end is whether it's a lifestyle, time freedom, what have you, then it makes things a lot easier for you. So I think for myself, the thing I value the most, I'm not sure about Thomas, is really like that peace of mind where I'm not doing this because I want to go buy a Ferrari or a yacht, but I just want to be able to sleep knowing that, wow, anything happens, likely I'm okay because of the financial security that I have or that you have.
Yeah, Lawrence will love you if you spend on the Ferrari 600,000 supercar tax. Contribute to the development of the roads.
Can you say that? Like, are you going to cut this?
But yes. So how is life like as a millionaire? Like you openly tell the world, right? You're a millionaire, right?
Yeah.
And are you a millionaire?
No, I never say.
Yeah. So
Yeah, important, important that people want to know.
Yeah.
Yeah. How is life like? I think that's the part.
So I think I'll just be completely transparent, right? The truth is still today, right? I think 90% of my friends don't know that, and that's the reason why I love Twitter, because most Singaporeans are not on Twitter. So and even telling people that
But
I've
now
made
you say
7
already, everybody
figures.
will know.
Yeah, so in the personal finance space, I guess most of my friends are not in that space. So yeah, but hopefully one day they can really learn that. So, but I think for me, I don't openly say that. Until today, I'll just be upfront, right? I feel very uncomfortable saying it. I don't know why. It's like maybe an Asian thing where you're just not comfortable talking about yourself. But I realized that the reason I was starting to be able to be more open to share these results and achievements was when a friend of mine told me that, Max, you're going to get haters by saying this, but you're also going to inspire a bunch of people who, you never know who you could inspire. So I think that's why I started being a bit more courageous to share about, I think, my results or my current financial status, what have you. And sorry, your question is, how's life like as a millionaire?
Wait, but before that,
Yeah.
so why you not so courageous? Why you don't understand?
I'm just not that courageous.
Yeah.
Yes, continue.
We're gonna train that up. Yeah. Sorry, I lost my train of thought.
How's life like
okay,
as
yeah,
a
yeah,
millionaire?
yeah.
Yes.
I would say actually I think two things. From a physical level, like nothing much has changed. I'm still working in the jobs that I love to. So I didn't like the minute my interactive brokers account crossed like 7 figures and I'm like, oh yeah, like F this, I'm out. No, I think I'm still doing what I currently love doing, which is a lot of public speaking and seminars or marketing stuff for my current role. And so nothing has changed. But I think, so physically, nothing much has changed. I'm still working as hard, if not more. Because I think the truth of life is a lot of people think that, being rich is just making enough money and then just never working another day of your life. But I think to me, rich means having enough money for financial security and then after that, go doing the things that, you are willing to suffer for in that sense. So physically, nothing much has changed. But mentally, it's like, what's the metaphor for it? It's like sleeping on a freaking fat pillow. Even let's say, I think now there's a lot of drawdowns happening. There's a lot of craziness in the markets. I know a lot of people are getting margin called either due to leverage or over margin or options, selling put options, what have you. And thankfully, of course, we don't take on much margin ourselves. And just knowing that in this period of time, anything can happen and you're still able to just go through life without sacrificing any quality or reducing the quality of your expenses or life. I think that's a very nice feeling to have. So I think the word it's inner peace, if that makes sense.
Oh, you guys
yeah.
damn zen.
Yeah.
Suffering lah, inner peace lah, all big Buddhist ideas.
Yeah.
But you also had the sell down the Peloton, right? So
Yeah,
Peloton
yeah.
position.
Yeah.
So important for you guys listening.
Yeah.
Max sold his Peloton position, lost some money. Check
Yeah.
out TFC stock geek out for the full geek out.
Which was
that.
interesting. After we did that session, the stock sold down another half. So we kind of did it right.
Yeah, we did it right. Good time.
Okay.
Yeah, but I think the extended discussion is this then a worthy pursuit? If being a millionaire is like you, right? Cai peng, and then do pretty much the same thing, or even what you guys said, like there's the financial comfort, right? The sense of safety. Is it then a worthy pursuit? Because it is not a cost-free pursuit, right? You are sacrificing certain things, right? So would you think it's a worthy pursuit, and what have you sacrificed to get to this position?
Actually, maybe I just share like what some of my readers have recently reached out to me. Like, there's quite a few readers, they recently lost their jobs, and I guess this is really where wealth comes into play, right? It is not so much that we want to change our lifestyle and upgrade lifestyle inflation, but when there's wealth, there is options for you to do what you love, options to do what you like. And in situations like this whereby unfortunate things can happen, and when they spoke about how much agony they're going through and all that, my heart really goes out to them. And which is why it's important to have a safety net. It's very important to have a safety net so that you can continue living the kind of life you want to live, so on and so forth. When we talk about the sacrifice, right, I actually, to be honest, I didn't felt like there was a lot of sacrifice because I'm naturally a low SES person. So, make money, save money, invest.
Yeah, he always show me hawker center.
It's
and I
always
love it.
hawker
It's
center.
great.
I'm a foodie, so I know like where all the good hawker food are, right?
Show me all the way to Marsiling. Wow, tahan. Yes. So I stay in Tampines, by the way, guys. Yes, continue.
But yeah, I think a lot of people is wondering like what's the secret to get rich and so on and so forth. But it's always like the simple mantra, right? You make money, you save money, you invest it, and then you do it long enough, it just happens. So to me, there wasn't a lot of sacrifice per se. And when that independence come, it was just very liberating to be able to do what I want to do instead of having to work just for that paycheck.
How does that feel, the liberation, that change?
I think for Max, he's a bit luckier because he managed to find his calling quite early on, which is public speaking. For me, right, because I come from a background whereby both my parents weren't working, so I had to do a lot of things which I didn't optimize for the kind of life I want. So like I take on bonded scholarship, I work for the government, etc. Even though when I signed a bond, now I can say because I'm not in the workforce.
Pay finish already.
No longer in the workforce, right?
Yeah.
It's like the day I signed, I knew like that the job wasn't for me because my heart was really with investing. But because they gave a constant allowance, and back then I was all about trying to protect my portfolio. Right, I remember at around 23 or 24. No, I signed it at around 22 years old. Yeah, when I signed at 22, I think my portfolio was like $25,000 to $30,000, and in my mind was like, I just want to faster get it to $1 million, and so I didn't want to touch that portfolio for Why are you looking at me like that?
Because I just want to backtrack to the questions. Like, so where are we now?
Sorry,
you know?
sorry. Maybe I continue. Yeah. So I didn't want to touch my portfolio. Right? I could have used that for school fees and all that whatnot. But I just wanted to grow that portfolio as fast as I can. Yeah. So that which was why I took on that scholarship. But the moment I start work, I felt like maybe some decisions should have been revisited, etc. But ultimately, that was really the price, right? The independence to finally earn that privilege to do what I want. So that was it for me. That's the price for me.
Max, you wanna
Yeah,
share your price?
I just want to say something regarding what he mentioned. So the first time I kind of met him, right? I thought I was probably like the hardest worker in the room who had life tough and everything because I have a 9 to 5 job that's in the public speaking space. So a lot of seminars we do is on weekends. So I have very little free time. So how I really mastered investing was with the little bits of other free time left. Just read as much as I can. I'm really very obsessed with it. I did pay some prices, which I'll share later. So I thought I was damn hardworking until I met him and I heard his backstory about, his background and all that. I think, I felt like, wow, I cannot compare to that. So it's really very inspiring, right, Thomas? For me, I think Thomas nailed it. I come from a bit more privileged background, as in still middle income family, but privileged in the sense where I was very, very lucky to find my passion, calling, what have you, at a very young age. So I've always loved just inspiring people from stage. To be upfront, I'm actually an introvert, so I also don't know how that works. So I'm in my free time, I prefer to be alone, but I just love the idea of having your stories, your life examples, or certain words and meanings that you say really just plant a seed or just change someone's perspective. So that's why I think I found that calling at a very young age, and I pursued that path even in my 9 to 5 career. That's what I did mainly as a full-time job. And I think for myself, sorry, what's the question again? Sorry.
The cost.
Yeah.
What is the
Okay,
cost
the cost,
of this
yeah.
pursuit? Yes.
There is a cost. So I know Thomas mentioned he felt that he didn't really have pay a cost because he really enjoyed it. I think for me, I also enjoyed it, but there were certain sacrifices I made, which I think till today I'm still trying to reconcile. So to kind of share up front, since I was young, I was very close to my grandma. My grandma is someone that brought me up. So I come from the typical latchkey Singaporean family where both parents are working, so they drop you off at the grandma's place. So I grew up with my grandma since I was young. I could speak Hokkien really, really well because
If
she
we can
speaks
start a Hokkien show, huh?
Oh, hey, sorry. Okay, so anyway, what happens is, I always told my grandma, you know what, I don't know why this has been in me since young. It's a very competitive streak, right? Like, Amma, I'm gonna be rich one day and be very successful. I want to make you happy and make you proud, and that's really the goal. But of course, I think along the way you get consumed by this need to be quote unquote successful, whatever success means to normal society standards. And I recall there was this one afternoon I went to visit her on a weekday afternoon because that's my normal off days, because weekends I normally speak for seminars. And we were having lunch, and she was trying to speak to me during lunch. Back then she was like 90 plus really, trying to speak to me during lunch. And then she was eating lunch. I already ate mine, so I was using my laptop to research some stocks because that was my obsession in my free time, right? And then she was trying to talk to me, but I just kept like just brushing aside and just like using my laptop. And then after a while, I think she could sense that I wasn't that interested. And my grandma is a very, very considerate person. She would put everyone else above herself. So I think she could sense that she doesn't want to disturb me. I was very into it. So she said, Max, grandma has eaten finish already. I think I'm gonna go to the room and rest. I'll get the maid to just push me in because she's in a wheelchair. It's okay, you can just use your laptop. It's fine. So she said it in a very, very 慈祥, very, very loving way. And I thought, okay, cool. No one's here I don't need to entertain that, like, or get kind of distracted. So the maid pushed out. And then after the maid pushed out, as I saw her back just leaving the kitchen, I was like, oh crap, I feel like so terrible. Here's my grandma who really brought me up, and here I am trying to research stocks when really I don't know how much more time I could have left with her. Long story short, I told myself, okay, Max, the next time I come and visit her, I will not bring my freaking laptop. I will at least force myself to speak to her for an hour, at least just say anything and at least just be present. And so really I came to that idea lah. But funny enough, about 2 weeks later, she passed away. So that was really the last time that I saw her. And the funny thing was, the very day I crossed my first 7 figures in my Interactive Brokers account, when I look at that thing, I don't really tell people this, but it was a very empty feeling. Deep down, I knew that I was probably I felt like the lousiest person on earth, because that money is there, but I could no longer, first of all, celebrate my grandma, who I said I wanted to do this with, and secondly, I was researching stocks when that was the last moment I could have spent it. I mean, I didn't know that was the last moment back then, right? Life is unpredictable. And that's when I realized actually, along this way of chase for wealth or what have you, life is not, or whoever created that you believe in doesn't tell you, hey, you know what, go and achieve your goals. After you achieve, then I take your grandma away from you, okay? Like they're going to hit you before it happens. So was there a cost to pay? Yeah, it happened. Was there a price to pay? Definitely. Do I regret it? I don't know how to answer that question, because achieving certain financial freedom did give me a lot of peace of mind, but I did pay a price in terms of the time I sacrificed to go master certain things that was important to me. So yeah, I don't know whether this answers the question fully, or whether it reconciles anything for the users, whether they should, or the listeners, whether they should go achieve wealth. But there are certain prices to pay.
Yeah, fair. And do you feel like at this position when you guys are looking at things, right? It's like you already climb the mountain, then you tell the people don't climb the mountain. Or you tell the people like, the mountain got a lot of problems if you choose to climb this mountain, right? Like, how do you reconcile this view?
So for me, that's why I came to the realization. I realized that, hey, you know what? At least maybe you could say this is just me trying to reconcile with it, because we are all having our own internal struggles. I realized that, okay, this happened when I was 29, because I achieved that when I was 29, and I realized that, okay, it was my grandma that I didn't get to spend time with. But hey, like with this level of certain financial security I have, I can still spend it with the people that I still have in my life, whether it's my mom, my dad, my parents, or my friends and family. So I realized that, yes, while there was a cost to pay, financial freedom, buying someone the time and freedom to go do what they want to do with the people that they love for as long as they love, is still a very meaningful pursuit. So, and I think the thing that hit me the strongest was, like I mentioned just now, life doesn't wait for you to get everything in order, which is why I really believe as much as you can, go learn the skill set that's needed. The key is the skill set to go grow your money, because we all know how to make money. It's just trading your time for money, for a salary, or for in business. But if you can have the skill set to go grow your money, and the earlier you can achieve that, I'm not saying, because I know we have the privilege of being young. Maybe some people watching this in their 40s, in their 50s, but as soon as you can hit a certain level of wealth that's okay for you, and it may not be $1 million, it may not be $10 million, it could be, for some people, maybe just a few $100,000, what have you, that level of security or comfort, that peace of mind, can then buy you the ability to go spend it, whether it's your kids, your daughter, your son, or someone, or a charity that you want to pursue, any cause. I think that is still something very meaningful. So even though I have that regrets for my grandma, I hope that I still realize that time is something that a lot of people, we can never buy more of. And I hope financial freedom through investing skill sets can help people achieve that.
Any thoughts?
I think for a lot of people, there are ultimately two ways to be financially independent, right? One is to become an entrepreneur, and number two is
very
really
hard one.
just very tough.
Yeah.
And it's not for everyone, right? I mean, even for me, I don't really see myself as an entrepreneur. And the other way is to really just to invest. Why? Because investing, you're ultimately putting your money with other entrepreneurs. And this is where the skill set come in, whereby you must learn how to choose the right horse to put your money in. And a lot of this kind of remarkable entrepreneurs, right? Once you put your money there, they are the one actually working for you. But as an investor, there are two things we need to take note. One is we must learn how to read the financial statements, how to size up the management, etc. And number two, which is even more important, is our own mindset. We always say Amazon, rose maybe 4,000 times from maybe 2 decades ago until today. But you look at the amount of 90%, 80%, 50% drawdown, so many times. And how many people really have what it takes to hold it through, right? And so the mindset sometimes is even more important than the skill set needed to find the stock. One, you need to find the stock. Two, you need to have the stomach to hold it through. And so I really resonate with what Max said earlier. At the start of our life, we'll be exchanging our time for money, right? But ultimately, we don't want to do that to an extent whereby, some experiences in life, once it passes us, it doesn't return. And I see investing as one sort of tool whereby it can help accelerate the process while not exchanging further time. Because entrepreneur, you have your bills to pay, expenses. I'm sure you can relate, right?
I know. I'm vibing here, guys. Yes.
You have that things, that is sucking up your time, your energy. You want to make sure everybody paycheck is rolled out on time, etc. But investing, we don't really have that problem, because ultimately it's the jockey we bet on. we invested in who's doing the work to us. And and that helps accelerate the process from using time to exchange for money to, we change it to using money to try and buy back time, to spend it together with our loved ones.
And that is the mindset side of things, right? Pretty much. And you guys have already came on the show multiple times to talk about how you invest. I'm not going to ask you the same thing, right? But it's like, if you guys want to hear, just listen to the other episodes, search the name, TFC Stock Geek Out, there are tons of those things. But I think how you name your program, right? Which is like, I mean, I kind of sense it, a lot of suffering, Buddhism ideas here, peace, acceptance, a lot of these things. So I kind of know why you guys call your program Zen Investing, but what's so zen about the market today? It's crazy. Like, what are your takes?
Yeah, so actually the market right now as we're speaking now is March, right? March 2022. It's far from zen. It's super volatile, and I think the S&P is down how many percent? 10% year to date. I forgot the actual amount. But anyway, I think for us the belief is that real investing, or okay, maybe not real because we're gonna get like
you gotta get
pushbacks.
hate.
Yeah. I think investing in our perspective, it's supposed to be zen, right? In the sense where, because I like to use the metaphor where if today, investing to me is like own a business, which I'm sure Reggie you can relate. If you own a business and you see yourself as a business owner first and foremost, you don't wake up every day going online to some auction website. Let's say today, Financial Coconut, you own the business, right, Reggie? You don't go online every morning, log into some auction website, auction Financial Coconut online, see how many people bid for it, whether the price they want to pay is high or low, and then in the evening 6 p.m. go and see, actually today people want to bid higher than what my business is worth, and then you feel very happy. The next day you feel sad, but then actually you have no intention to sell. You just want to see how much people will bid for it.
I only want to sell NFT.
Yeah.
Seller's market, right? So
Nice. That's quite funny. So,
dude, we can have that long discussion another time.
Okay.
Yes.
So you don't do that. Then to me, why do you do that with your stocks? What's the difference? Like, why are you so? What's the word for it? You every day you check your stock price multiple times. There's no difference between that and a business, right? So to us or to me, I think being an investor is first and foremost being a business owner. And as a business owner, if you know the value of your business, which is through valuations, you know the business model and the competitive advantage, you will stay pretty calm / zen. And so I think that's how it comes about. So the market can do WTF it wants to do, right? But deep down, if you know the value of a business, you're not going to sell. You're not going to be worried about the stock price every single minute, every single second. So I think to us, that's where the zen comes about. So to answer your question, the market right now, it's not zen, but you can be a zen investor / business owner if you know the business you own and the value that it's worth. Yeah.
But to be very fair, there are all sorts of market participants, right?
Yeah.
People with all sorts of strategy, all sorts of ideas, robots and what have you in the game, right? So this is just one way of doing things, right?
For sure.
So that is I just want to put that out.
Correct.
Yeah. So why this way? Why Zen?
I think I think you hit the right point, right? There's multiple ways to play this. Every time we buy a company, there's always someone on the other side who's selling to us, right? And both of us could be doing the right things, right? It could be right for both of us. It depends on really what type of game we are playing. And so for us, we choose to be long-term investor, right? We really see ourselves as business owners. So while in the short run, I have no idea where the stock market will be going. But the business fundamental, the operating metrics, as I track them, if they are doing fine, then that is fine with me. I think it is a common pitfall for a lot of investors to associate the movement of the stock price with the fundamental of the business. But as investors, we always need to recognize that they could be disjointed, at least in the short run. So the Zen part really comes when, as a business owner, I know that this business will be bigger 10 years from today. And that is fine with me. And to be honest, I think this year, I think I only lock in my stock brokerage account 3 or 4 times. And each time I go in, it's really just to buy, and that's it. And then I'll exit, go to sleep. Yeah. So this is really where the Zen part comes in. I'm not so affected, or actually I would say I'm almost totally not affected by the movement of stock price, because to me, if the business is doing fine, I'm confident 10 years from today, it will be generating more cash. It will become bigger. It will still be better than the competitors. Then that is fine with me.
But what changed? In the sense that people don't usually start like that. When you first start, there's a lot of thrill, a lot of excitement. Dude, you sign a bond, right, to protect your portfolio. So at what point did it shift? I think that's the question a lot of people want to know, so that how do I move into that realm?
I think I spent about 5 years trying to figure out what type of investor I was. Like I mentioned, I started around 17, 18, and there wasn't really anyone to teach me at that time, right? So to me, like, it was just going to the library and reading every single thing I could find. Started out from looking at charts and then looking at prices every day. I would go to the Bloomberg terminal in my school, trying to draw that, this and that. But ultimately, it was really until, which is similar for a lot of investors. You read Warren Buffett letters, it just makes so much logical sense to you. The way you should be looking at the business, you should be focusing, competitive advantage, how much cash they are bringing. And, it really fits the kind of lifestyle I want to have going forward. Because ultimately, to me, investing is a tool for me to become free. I don't want to always be looking at the prices, etc. It could work, right? For technical analysis, I don't do it, but it could. But for me, if I want to be independent, the kind of lifestyle I want to have, not be shackled to the stock market, then being a business owner just made so much sense. So it's really since that aha moment, once I discovered the Buffett letters, then from then on, that was just the mindset I adopted all the way.
So Buffett was the one, Buffett letters.
Right.
Okay, yeah, and he published a lot every year, many letters.
Many letters. It stretched all the way back to, I think, 1950 something. His partnership.
Even
days.
his partnership days, right? Yeah.
Yeah. So okay, cool. We should read some. We'll do some content around those things. Nice. But to be very open out there, there are many programs.
Yeah.
And we're friends with many of them, right?
Yes.
It's like you trying to make us not have sponsor from the banks. All the new providers,
Sorry.
right? So no, but I think the leading question is like, why you guys? Like, what's so special?
So like, as in, what makes us different?
Yeah,
per
like
se.
like as our listeners, why should I use you?
Got it. Actually, I can share a funny story, right? And that is, okay, I think to answer the question more straightforward first. And the answer is, we don't know, right? We don't know what makes us different. But I'll share the backstory, and that is like, between Thomas and I, when we first started this, we did ask ourselves, like, hey, Thomas, or I asked him, we're going to start something. There is so many amazing investors in the market, not just Singapore. I think Singapore, there are a lot of amazing investors. Some of them even mentored me. But even US itself, hey, it's a whole different ball game. There are so many smarter, better, faster investors. What's going to be our positioning, or what makes us different? And then we just, after some discussions, ping pong here and there, we just realized, came to this aha moment that, hey, you know what? Like, back to first principles, let's not try and be different for the sake of being different. Let's not try and position for the sake of positioning. If we really want to ask ourselves, what does the beginner investor, which is our market, what does the beginner investor need? It's one thing. It's the skill set needed to know how to analyze a company so that you know whether this is a strong company to buy or not to buy. And then what is the real value of a business? And realize that, okay, I don't know whether this makes us different, but the ability to know that. And so we decided to create a program in such a way that it's a live course where we teach them the skills and they do it along with us in the class. And then after class, there's some 20-30 minute homework in Singaporean style. There's always going to be homework. So they actually execute this so that at least it builds it into their muscle memory, and they know and they can build the independent skill set to go analyze a business, or for most businesses that they come across, whether it's a loss-making company or a profitable compounder, what have you, they know how to analyze the strengths, the weaknesses, and more importantly, they know how to value it to find the range of intrinsic values, which is normally a range, so that in a period of drawdowns or in a period of bull runs, they know whether they should buy, they should hold, or whether they should just stay on the sidelines and wait for a better opportunity to buy at a fair price. So I don't know whether this answers the question specifically as to what makes us different, but that's what we were trying to go for, to build the skill set independent in the beginner investor. Because that's how you can stay calm / zen. Because if you don't have the skill sets to analyze this properly, how are you going to decide in this moment where there's so much stresses in your head, where the price is bobbing up and down, that, oh, I need to buy, I need to sell? You're going to be taking decision based off the price movements, right? Because you have no inner compass. Yeah. So I guess that's what makes us different.
Yeah. But we can all agree that
Yeah.
acumen takes time, right? Like, you can learn the format, you can learn
For sure.
the frame, but acumen takes time.
For
You gotta
sure.
pick up different sectors. It's not like, oh, I come for their program and then suddenly, oh,
Correct.
I can
Correct, exactly.
I can be amazing.
Exactly. So that's why at least we want to at least let them do it once so that they build like a rough muscle memory. And then, of course, the acumen takes time to go develop through repetition.
Yes, and they can continue to listen to TFC Stock.
Yeah.
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 So
Yeah.
what about you?
Yeah.
What's so special?
I think both of us are big big fans of Atomic Habits, right?
Yeah.
I thought you wanted to
develop
say
that-
you're a big fan of me.
Yeah, of course we are.
That's
Wouldn't
why
be
we are
here.
always
That's
on
why
the
we're
Yeah.
here. Woo!
Yeah.
Yes.
Yeah.
Yeah. So I mean, I guess the challenge for a lot of people, it's not that you need super high IQ in order to learn how to invest. Rather, it is more about developing that habit. So what we want to do is not just to give that basic knowledge, and on top of that, teach them how to analyze, how to value a company's, how to position size. But really, the whole intention of this program, right, is to get them to be hands-on also, which is why the homework, which is why we will be showing them exactly how we analyze companies on the spot, and also getting them to do it along with us. Because we want to break that inertia. And over these few sessions, right, of live classes, we don't need to be pre-recorded, because I think pre-recorded people just watch and forget. Live classes, then people will, really take out the annual report, and we can work it through with them. They can discuss with us, give us all their questions. And really, we want to start this momentum going, because you need that feedback loop in order to become a better investor. And we want to start that feedback loop going. And what you say is entirely right. It's not like after this full course, you become a super investor. You have to go through that repetition. And our job here today is to, really help you kickstart that, answer any questions you might have, and hopefully it builds a habit whereby you are able to do your own in-depth research, because conviction is something that can never be bought. Throughout this drawdown, I've seen a lot of investors who invest based on stock tips, etc., become paper hands. Not because the companies they are holding is bad or something, but that 50% drawdown, many people cannot tolerate because they didn't do their work in the first place. So ultimately, this is what we are trying to achieve for the participants.
I love how paper hand is a thing now. Yeah. So you're the diamond hand, right? You're trying to hold. Okay. But the big money out there today, right, is propagating diversification, propagating index funds. It's a lot of money going into that, right? So the big fund houses are doing that, right? Even all the robos, they are doing that, right? So but you guys are exactly taking the opposite direction, right? You pick from bottom, concentrated, very specific. What is your take? How do you comment on the big trend of diversification index funds broadly diversified? Yes.
Actually, I can share my take first, because then you can share yours, right, Thomas? I actually believe there's a very important part to play for diversification, or for ETFs, right, or robo-advisors, what have you. And that's something
Don't say anymore. Don't say anymore. You already mail banks. End up we have to sell cost ourselves.
He's going to lose all his sponsors just from one episode.
No, one episode. But yes, continue.
Okay. And that is something I don't think many investors will agree with me, and it runs counterintuitive to me creating this investing course. And that is, I believe, first and foremost, not everyone's made out to pick individual stocks. I want to say this clearly. Even though, yes, we are teaching you how to pick individual stocks, I believe first and foremost, not everyone's cut out to pick individual stocks. So what do I mean? If you're the kind of person who, number one, you really prefer to have someone else make the decisions for you, because just even reading an annual report for like 30 to 45 minutes, just the important stuff, even zone into that, it's too much for work for you. And number two, if you don't have and this one, everyone will know themselves well enough, if you don't have the mental fortitude to go and withstand some pain and some drawdowns, then really picking individual stocks is going to be very miserable for you. So I just want to be clear, if that's someone that you are, whether it's our course or someone else's course, I think you will not find that magic bullet you're looking for. So I still think many investors, if they can't pick individual stocks, hey, diversification via ETFs or robo-advisors is a very powerful and useful thing, because at least it will still beat the interest rates in those institutions, right? So even having like a 8-9% per year per annum on the ETF or in the robo-advisors, what have you, stash away or these kinds of, hey, that's a very useful thing for people who just don't want to put the money in the bank, right? But of course, those of you who indeed want to know how to pick individual stocks, then I think that's where we feel we can come in. So I think my perspective is, I feel it's very important to still have ETFs, robo-advisors around, because some people just don't want to do it, or just cannot do it. Yeah.
Okay, fair. Thanks for saving the network.
Yeah.
What about you?
As in, I fully agree with that point. Not everybody can be an investor or should be an investor, right? If you're not willing to put in the hours, for example, or volatility scares you, then sometimes just automating into an index that will work best for most people. But the people we are really speaking to is people who have a deep sense of curiosity as to how things work, right? And the thing that really captured me and Max into the world of investing is just that we are curious about everything. And investing happened to be one of the tools whereby we get rewarded for being curious. So this is really the people we are looking out for, and people who are able to, remain zen throughout drawdown. Really able to disassociate price movement and business fundamentals, because I think this is so important if you want to become a successful investor.
Great.
I just want to say something here. You recall the conversation we were having, just to elaborate on why I think not everyone can pick individual stocks. And he mentioned something about curiosity. So about a few weeks back, we were just having a chat, and then with some other investors, and we're just asking, so what do you think it takes to be a good investor? And then Thomas, you can elaborate because I know you said it. And then Thomas was like, wow, every time I read about a company and I learn something new that I never knew, I get like a 小嗨. Right?
Yeah, that was the exact words.
And then we could all relate to it, because it's so true. When I read something, whether it's like Airbnb or McDonald's, or like, actually Starbucks, the real money is made because of all the cash that it takes from customers for the Starbucks card, what have you, so that it has a longer time frame to pay suppliers, whatever. When you learn about these little things, I'm like, wow, like I feel so excited, but I don't know where this feeling comes from. So I realized this is the genuine part about why I got hooked into investing. I got bitten by the bug. And then, of course, the money as a side effect, is it nice? Yes. But it comes more as a byproduct of this genuine 小嗨 that you just want to keep having more of. So is it exactly a healthy thing? No, I think like it's we're still trying to find the inner satisfaction, what have you, right? Nobody's to say this is right or wrong. But I think this is what it takes to be an individual investor.
Yeah, you must be excited by learning new things. It shouldn't feel like it's a chore to you. Really, it's like a runner's high. Every time I read, every time I learn, it's it uses that dopamines just keep coming.
Yeah, I can feel it. You said straight when he was saying that. I said, it's cool. I get it. Yeah. So I think everybody wants to, if they listen until here, they want to know how you're going to play the market now. Like, what are your thoughts, given current situation?
For me, right, it's really just dollar cost averaging. I have a full watch list of companies I want to buy, and so for myself, right, typically market crises drawdowns on average they last about 15 months. The drawdown is about 25%. So for me, I usually don't exhaust my bullets so fast. I will tranche in my position. So every week or two, I'll just go in, I'll just buy something whenever the drawdown is significant. So I like this saying from Warren Buffett a lot, right? If you are going to be a net saver or net consumer for multiple years to come, then you should be very excited when prices start going down, because it just gives you a chance to buy things cheap, right? And I think a lot of investors, when the stock market is going up and up and up, they always say this one dropped 50%, I confirm all in. But when it really dropped 50%, then they will be thinking, shit, there's a war, inflation, interest rate, everything. That's the thing. You pay a very expensive looking price for a rosy outlook, or if you need everybody to have a very cheery consensus, you're going to pay a very heavy price, and that is not the way to do things. And so for myself, it's really the work is done beforehand. I have a list of companies I like, and it's just buying in tranches. Yeah,
good.
Yeah, I think I'll tackle more from, because he already mentioned things that I will definitely not add on more, because it's actually pretty great. I think I'll tackle more from a holistic point of view as to how we're going to play the markets. Okay, number one, I wouldn't use the word play the markets, right, just to be fair. And I think from a more holistic point, let's talk about a personal finance point of view first. I think number one, before you even talk about investing in the markets at this moment in time, because I think we're at a juncture where it can be quite scary to a lot of people, your safety net in terms of the emergency fund should be there. Thomas is pretty conservative. He does 2 years. I have 1.5 years. And I thought I was conservative till I met him, 2 years. What the heck? Okay, so 2 year safety funds, that's important. Number two, make sure I know this is not sponsored, but whatever insurance policies you're supposed to take out, whether it's accidents, whatever, make sure you have that in case anything happens in this period, because I think that's very crucial, right? And then number three, only with then this big fat pillow and peace of mind, then you go invest in the market. So DCA, dollar cost average, all these Thomas has covered, but I think I'll cover a bit more from the psychological view since I'm in marketing. And that is number one, right? Don't check the stock prices every day. Why do you need to do that? I think Thomas mentioned he logs in how many times? Three times this year.
No, but it's an eventual thing, right? Yeah. It didn't start like that, right?
When I was first starting out, I checked every day.
Yeah, that's how it started for me also, right? But eventually now it's people tell me, it's like, huh, really? Something happened?
Yeah.
I'm just
Yeah.
too busy doing my things. I have no
Correct.
time for it. Yeah.
And so I always tell people this, which they think are a bit extreme, which I think it's extreme. So you may not need to adopt that. But I actually don't have the stock brokerage app on my phone.
I delete, yes.
Yeah,
yes,
same. I delete it.
Same.
Then people ask, how do you trade? I tell you, what do I do when I want to buy it? I will re-download the app.
Exactly. Yes.
Then after that, because when you re-download, they lost the data, you must go through the 2FA, everything.
Yes, yes.
Damn high barrier, which I love it because it makes me rethink whether I really want to buy. And then after I buy it, I delete it. Right?
Same,
So
same.
yeah. Thank you very much. So I think that is very important because it keeps you psychologically like at peace of mind, because you think for a second, every time you see the stock price move, it will induce this thing called a call to action, the need to do something, whether it's to average down, average up, sell a put, whatever, because it's very cheap. So reduce the need for you to go make call to action so you can think properly. That's number one. So don't check the stock prices too often. If you find yourself doing that, then delete the damn brokerage app. Or people will say, Max, if I delete the app, how do I know whether the market is on discount? I tell you what, when the market is on
Everyone's
discount,
talking
you
about
will
it.
know. Your friends will talk about it. Your mom will tell you about it. Which really, my mom asked me, hey, Max, your stock's okay, you know, now so you will hear about it from your parents or from your aunties, so you don't have to worry about whether you will miss out on buying opportunities. And number two, like Thomas mentioned just now, right? And that's so important, because other than having this peace of mind, you want to make decisions before the stress hits. So like, you notice he has his own watch list and everything, because you cannot possibly make decisions when your mind is, or you can, but it's not going to be optimal when your mind is stressed. So make the decisions as to have a thesis that you write out, which is just a few things we'll normally teach in our investing course. Like, write out the thesis as to what will make you sell this investment, what will make you whole, so that when you are in stress, you can go back to refer to that, rather than at that point in time when you're stressed, you got nothing to prove to, then you're like, oh, what should I do now? Then you're going to be making certain decisions that may or may not be to the best outcome even in the long run. So yeah, those are some tips as to how we would kind of execute our buying movements in this period. And I think Thomas covered the buying part.
Yeah. And I just want to tell all you listeners, I turn off all push notification on every single financial app.
Same.
Right, because they will push you all sorts of stuff. I know they sponsor us, but they push you. It drives the dopamine, all those stuff, right? So all notifications are off. I go in with a clear mind of I want to do something.
Yep.
It's not they asking me to come in, right? So all the notification, all turn it off, right?
Yeah, but just make sure you subscribe to the Financial Coconut and just keep that on, right?
Yeah, that one important. Just 开小铃铛, right? Just turn on the bell. Yeah, okay. So I think in closing, we've talked a lot, right? What are any other things that our listeners should know in exploring your program? I mean, you already shared a lot, right? So in any last things in closing? Yeah, details will be in the description below, right? You can just go to the description to link over and sign up for the program.
Thomas, you can go first.
I think Max is very experienced in running this program. So in order to keep the audience engaged, we have a very hard rule, which is they must turn on their camera, and you must be willing to participate. Right? I think what matters is really you must come with a mindset whereby you are ready to roll up your sleeve, get your hands dirty. Because ultimately, to become an investor, you cannot learn it by watching other people do it. You cannot learn it by reading books. Not enough. Those are very important. Watching other people do it, read books, but you also must do it yourself, and that is really how you become an investor. So the mindset you bring to class, bring your energy, set aside the time, and really come ready to participate. Yeah. So that is really what we are looking for.
Yeah, for me, the class mechanics Thomas has covered. I think on the bigger picture is just I think end off with one thing, and that is I can really share genuinely, right? Like the skill set of knowing that I can analyze most companies, not all, but most companies that come across my plate. If I really want to dig deep to find out whether this is a good company and how is it valued, it's a very empowering skill set. The level of empowerment, right? Like money can never buy this feeling. Just imagine today, like, because all of us, we work, we know how to save money and trade time for money and accumulate some base capital. But this ability inside knowing that you can go analyze companies if you want to and then decide whether to buy or not to buy, it's such a liberating feeling, because deep down you have the ability to grow money. So make money, we all know, but you have the ability to grow money. And this is something that we hope to be able to teach our participants, our students in this Zen Investing Academy, because we want to develop the skill set of knowing how to value and analyze companies. Because even if today you take away everything from me, let's say, touch wood, I get in some accidents, whatever, I can't move, whatever, as long as my mental faculties are in place, I can go freelance, whatever, do some work, some side gigs to make some money, and then I can still grow that money. So I think that's what we're hoping to achieve from a bigger picture, is to teach people the ability to grow their money through analyzing and valuing companies as a skill set. Yep. Thank you.
That's the game of the capitalist. Even if China take over, it will still be a capitalistic game.
Hey,
so
nice.
that's my hypothesis going forward. So yes, thank you for coming on the show. I hope the listeners enjoyed, and I hope thanks for spending time.
Thank you, Reggie, for having us.
Thank you. See you guys
Appreciate
again.
it.
Yes,
Thank
come
you.
on, geek out more. Yeah.
Okay. Yes, sir.
Okay, bye guys.